Hello, and welcome back to another video. The government is currently shut down, but we are taking our financial future into our own hands. We are investing day by day, dollar by dollar, and continuing to ensure our future financial success. In this video, we're going to look at September's dividend portfolio, the buys we made, dividends received, and just my thoughts on where my portfolio is headed in the future. And I'm also going to talk about my new dividend portfolio tracking spreadsheet that I am going to be launching pretty much in line with this video, the beta version for free. So if you do want to check that out and test it, there will be links in the description and instructions on how to do that. Basically, at this point, some of the functions are a little bit slowed down because of data limits, but it's free for now. And so this just gives you an opportunity to use it at a slightly limited capacity, and then gives me an opportunity to continue testing and getting your feedback and thoughts as to how I can improve it and any bugs you guys might be seeing. So hopping into the portfolio spreadsheet, I actually haven't updated my personal spreadsheet to be completely in line with my newer spreadsheet. There are some things in the new spreadsheet that are different and better and more versatile, I would say, but a lot of it looks pretty similar and feels pretty similar from the user's perspective. So these are all the companies I own. See, we did get 3 dividend raises this month, which is super exciting. So just over 4% from Texas Instruments, and just over 7% from JP Morgan, and then over 9.5%, almost 10% there from Microsoft, which is super exciting to see all 3 of those dividend raises this month, which will boost our dividend income for sure. I believe at the end of August, beginning of September timeframe, when I updated the portfolio, the income was around $371. So we got $3 of dividend raises essentially in the portfolio, which is just a little bit, but those dividends will be reinvested back in, those extra $3, and then that will continue to compound over time. So we can see the average dividend CAGR is just over 5.5%. So I do want to continue increasing that. Obviously, we'll have to see what it looks like after we make the updates for this month. I don't really have anything else to show. I guess we can look at these charts here, just see our steady progress over time as our value of our portfolio is well over $15,000 now, and continuing to grow the dividend income. Dividend yield has definitely been a little bit lower recently, but honestly, the market just keeps going up and up. So I would say that's expected for yields to be a little bit lower right now. But let's go and hop into Fidelity. I have all my transactions filtered out September 1st through the 30th. So we'll download these transactions as a CSV file, save these off, and then we can go back into the portfolio and import these transactions, import that CSV file, and then we'll be able to run my dividend scripts to basically parse through this data and insert it into my spreadsheet. So we'll just go here and parse the transactions. And in my new version of the spreadsheet, it's a little bit more complicated in some ways, you might say, because of the fact that it is basically one solution for all different brokerages. So you are going to have to go in and manually enter which columns correspond to which important pieces of data, but hopefully that will be like a one-time setup, and then every time you import the data, on whatever recurring basis you choose, like every month, I would say is most common. So after you set it up once, it should be good to go and not be any hassle in the future. So taking a look at some other features of the portfolio spreadsheet, so I have all the transactions listed out here. So for me, these go back all the way to October of 2020, so almost 5 years of transaction data in here. I can go through and look at when I bought every single stock and position that I own. I do have some sales and positions I've exited out of, but not really all that much. And then this is one of the features I really like, is you can look at how much you invested in each company over a specific period of time, and then also the dividends received from those companies. So this is going to close out Q3. So let's look for Q3 of 2025, and we'll go to the end of September. Obviously, this is going to be totally populated because, the script just finished right now, so it'll populate now. So we didn't deposit anything this month, like I mentioned. Life changes, shifting priorities a little bit, so haven't been actually depositing to the portfolio, but we still have a lot of cash, so that's not going to be an issue for a while. Total buys $140, no sales, and then dividends $41.70. So a solid month in dividends there. Usually the third month of the quarter is one of the biggest, I would say, typically. So I think that's pretty close to, if not a new monthly record. We'll have to go in and see. But now we can look at all the summary transactions. So we can see the most we invested in Q3 into any company was Carrier Global. So this is a company I've owned for a very long time, and I think at the very beginning when I bought the stock, it was around $16. That was probably mid 2020, and now I think it's in the 60s. As you can see, my average cost these 3 months was $65, but it's been in the high 60s and 70s. And so recently it's been, below $60 or close to $60. So I've been buying a little bit there. And then we bought some HP, Lockheed Martin, Texas Instruments, Procter & Gamble, Cisco, and throughout the quarter. And then I think the rest of these are just dividend reinvestments, essentially. You can see the amount invested matches the dividends received. So I do have the automatic dividend reinvestment turned on, which is a feature that I like at this point. I didn't have it turned on for a while, but at this point, since I do have a lot of cash in the portfolio, I decided to turn that on and just keep reinvesting into these companies. And moving over to the monthly dividends tab, we can see down here our total for September of $41.70. And I can confirm that looks to be the most we received in a single month. So the last greatest was $41.06 in June, and we can see this graph of dividends by month, just seeing steady progress over time, which is what I like to see. And then if we come over here, look at quarterly dividends, a total of $112.18 this quarter in the third quarter of 2025, so a good $9 increase over the second quarter, which is progress for sure. $100 a quarter is definitely a good milestone, I would say, and puts us at over $400 a year. So far this year in 2025, $313.43 in dividends, and that puts us just under $1,000 in total dividends received over the life of the portfolio, which obviously $1,000 over 5 and a little bit years, or I guess about 5 years exactly, is nothing crazy, but this is just the start, and honestly have no idea what the next 5 years is going to hold. And that's kind of what's exciting about investing, is you see we've received $1,000 over the first 5 years. How much are we going to receive in dividends over the next 5 years, and what is the value of that portfolio going to look like in 5 years from now is really what's exciting. And even 10 years from now, it's what's, I would say, even more exciting. So actually, let's go ahead and look at the specific dividends we received this month. We have to scroll way down here, but starting out on September 2nd, Aflac $2, September 2nd, Pfizer $8.84. I own a little bit over 20 shares of this one. Southern Company $3.15. Johnson & Johnson $11.69. This is one of my bigger positions, if not my biggest. There was a stretch of time when it was just seemed to be at a good price, in my opinion, for months and months at a time. So I just kept buying and really building up that position. Microsoft $2.01. 3M $2.34. Lockheed Martin $3.15. Amcor 87 cents. Travelers $1.19, and then $6.46 in interest on our cash. So obviously interest rates are going down. At least they went down a little bit in September. So the cash interest is going to be a smaller and smaller contribution, and also I'm not contributing additional cash to the portfolio. So that is going to continue to go down, but hopefully the dividend income from the other companies will go up as well. And if we come back to the summary sheet, the portfolio is now valued at $16,800 and dividend income of $377.84. So we added about $3 more, I believe, in projected dividend income from the purchases this month. Dividend CAGR average over the last 5 years is 5.5%. So like I said, I do want to get that higher, but I did get the quirks worked out in my data. So Apple is now showing the correct dividend CAGR here of just over 5%. And that is one of the things that I worked on in my new spreadsheet, is getting that dividend CAGR adjusted for splits. So if there are splits, it's going to accurately calculate the dividend CAGR and give us the correct value there. So data accuracy is one of the biggest things and sometimes quite difficult to achieve. We can look at our allocations as well. So biggest by far is about a third into tech. And honestly, some of these are super big tech companies like Apple and Microsoft primarily, but then I have some slightly smaller companies like HP and Texas Instruments that are still pretty heavy in the tech space, but they're not quite as high flyers, typically, I would say, like the Apples and Microsofts of the world. So I like having those. They're still pretty big companies, relatively speaking, but they're not quite on the level of something like an Apple or Microsoft. So I like having those in the portfolio as well to balance that out. And we can see tech is also a significant contributor to dividend income at 33%, because HP and Texas Instruments do have somewhat significant or substantial yields. Let's see, where's the dividend yield? Right here. So Texas Instruments is just over 3% and HP is over 4% dividend yield. So those are solid yields for sure. And we just saw Texas Instruments raise the dividend by a little bit over 4%. So that definitely helps. And in terms of performance of the portfolio, today is October 1st. So Fidelity's performance page hasn't actually updated for the end of September, unfortunately, but I will put a screenshot up there of what that looks like. But I would say most likely I'm going to be lagging behind the S&P 500 over the last 3 years and 1 year, and probably lagging behind a little bit now year to date. But what is really exciting for me is we can see the life of my portfolio goes back to October 19th of 2020, which means at the end of October, so just in a month from now, I should be getting the 5-year data. And I think there's a chance that my portfolio is pretty competitive with the S&P 500 over the last 5 years. So we'll just have to wait and see what that looks like. And I'm really looking forward to that. I do also track some performance on my own in my spreadsheet. It's not really a time-weighted rate of return. I just look at overall returns essentially. So I have this sorted right now in terms of just total returns, worst to greatest. And Leggett & Platt has been the biggest by far loser in my portfolio. My average cost is $31 per share, and the current price is just below $9. So that is absolutely terrible. And after the dividends I received over the years of $36 from Leggett & Platt, my percent return is negative 62%. So that's pretty abysmal. The next one, Amcor, is down 5%, including dividends. So that's not great either, considering I've owned that multiple years, I think, if not 4 or 5. So that's one I've been looking to get rid of, but honestly just don't have the capital to put somewhere else. And I do think they're going to recover at some point. Maybe that's just a sunk cost fallacy, but I sort of think they're going to recover and I can get out of it with a little bit less of a loss. But maybe that's just, like I said, the sunk cost fallacy at work. And then HP and Pfizer are also pretty small rates of returns. HP is one that I've owned significantly shorter amount of time than a lot of these other positions, so that's not as big of a deal. And I am receiving a significant amount of dividends from them each quarter, so that definitely helps. And I've been strategically lowering my cost when I can, and that is one of the bigger positions in my portfolio for sure. And then moving on up the list, we can see a lot of different companies have been performing well, but by far the two best performing companies in the portfolio are JP Morgan and Caterpillar at overall returns, both over 100% just on the share price. My average cost on Caterpillar is a little above $200 and the current price is almost $500. JP Morgan, my average cost is 131. The current price is over 300. So pretty incredible, I'd say, what can happen over just a few years. And honestly, these aren't like super ridiculous returns. They're just pretty good, I would say, for companies like that. And then with dividends, these are 135 and 148% returns, and multiple positions here up 100, 300, 400, $500 in total. So that's pretty exciting to see. And obviously it's just in the hundreds of dollars right now, not really into the thousands of dollars, but hopefully at some point in the future these returns will be more significant in the thousands of dollars for each position. And once the portfolio grows to multiple tens of thousands of dollars at some point in the future, that's what we're looking at, I think. So like I said, I'm very excited for the future of the portfolio. It's almost been 5 years since I started this portfolio, actually more than 5 years, but 5 years since I've been with Fidelity and really started tracking all this stuff. So I'm really excited to see how much the portfolio can grow in the next 5 years, and just keeping doing what I've been doing and investing over time. The one thing, obviously, I have stopped depositing to the portfolio, so eventually those funds are going to run out, but I'm hoping those can last close to a year, and at that point in time I'll be able to resume funding the portfolio, at least somewhat, and continue investing in these companies, and just building the blocks one at a time of my financial future. And I hope you all can do the same thing. So I would love to hear your thoughts on September, how that went for you, any companies you're looking at, or suggestions you might have for my portfolio. And I encourage you to check out my spreadsheet. It's free currently, and I would love to hear your feedback and thoughts. Any suggestions you might have are greatly appreciated, as it will help me make that a better and better product. So thank you for sticking around to the end of the video. I really do appreciate it, and I'll see you all in the next one.